Hello everyone, and welcome back to our channel. Today, we have an exciting topic to discuss: financial planning for couples. Tips for managing money together. Money is a significant aspect of any relationship, and effective financial planning can lead to a more harmonious and stress-free life for couples. Whether you're newlyweds, longtime partners, or even engaged, these tips will help you build a strong financial foundation together. So, let's dive right in. Number 1. The importance of financial planning. Financial planning not only provides a roadmap for achieving your joint dreams, but also fosters trust and understanding between partners. It encourages open dialogue about money, which is often considered a taboo topic. When couples openly discuss their financial goals, fears, and aspirations, they become more connected and emotionally invested in each other's well-being. Moreover, a well-thought-out financial plan allows you to prioritize your spending, ensuring that you're both on the same page when it comes to allocating funds for essentials, savings, and discretionary expenses. Ultimately, financial planning empowers couples to face life's challenges together with confidence, knowing they have a solid financial foundation to weather any storm. Number 2. Open communication. Open communication is the foundation of a strong financial partnership. It's essential to create a safe space where both partners can express their financial concerns without fear of judgment. By being honest about your money management styles, you can identify areas of potential conflict and address them proactively. Moreover, discussing your long-term financial aspirations allows you to align your visions for the future. This open dialogue enables you to make joint decisions on significant financial matters, such as major purchases or investments, fostering a sense of equality and mutual respect in your financial relationship. Remember, effective communication is not just about talking, but also actively listening to your partner's viewpoints and finding compromises that work for both of you. Number 3. Setting joint financial goals. Setting joint financial goals is a powerful way to create a united front in your financial journey. When you both have a shared vision of your future, it becomes easier to stay motivated and focused on your financial objectives. The process of setting these goals allows you to learn more about each other's values and priorities. For instance, if one partner dreams of starting a business and the other prioritizes early retirement, understanding these aspirations will help you find a balance that accommodates both dreams. Additionally, revisiting and updating your financial goals regularly is crucial, as life circumstances change. Celebrate each milestone you achieve together, no matter how small, as this will reinforce your commitment to working as a team and achieving your financial dreams. Number 4. Creating a budget together. A well-crafted budget is like a roadmap that guides your financial decisions. It provides a clear overview of your income and expenses, enabling you to see where your money is going and identify areas where you can cut back or save more. When creating a budget together, it's essential to be honest about your spending habits and financial responsibilities. This process might uncover some surprising insights about your finances, but it also presents an opportunity for growth and improvement. As you allocate funds to different categories, prioritize saving and investing for your future. Treat your savings as non-negotiable, just like any other bill, to ensure you're building a robust financial foundation for the long term. Moreover, reviewing your budget regularly allows you to adapt to life changes, such as career advancements, having children, or unexpected expenses. Being flexible and open to adjustments will help you stay on track and achieve your financial goals as a team. Number 5. Joint bank accounts versus separate accounts. Indeed, the decision to have joint or separate accounts is a personal one and should be based on what enhances your financial harmony. Joint accounts can promote transparency, making it easier to manage shared expenses and work towards common financial goals. It fosters a sense of unity, and each partner is equally responsible for the financial well-being of the relationship. On the other hand, separate accounts can provide a sense of financial autonomy and independence, allowing each partner to manage their discretionary spending without feeling scrutinized. This approach can be particularly beneficial if both partners have significantly different spending habits or financial obligations. Whichever option you choose, the key is to maintain respect and understanding for each other's financial choices. Remember, open communication about your preferences and concerns will help you find the perfect balance that strengthens your financial partnership. Number 6. Emergency Fund. An emergency fund is your financial cushion that provides peace of mind during unexpected circumstances. It acts as a safety net to cover essential expenses like rent or mortgage payments, utility bills, and groceries when faced with job loss, medical emergencies, or unforeseen repairs. By having this fund in place, you'll be better equipped to handle life's curveballs without resorting to high-interest debt or putting strain on your relationship. To build your emergency fund efficiently, consider setting up automatic transfers to a separate savings account. Treat it as a non-negotiable expense, just like your monthly bills, to ensure consistent contributions. As your circumstances change, periodically reassess the fund's target amount to reflect your current lifestyle and responsibilities. Remember, the key is discipline and patience, as this financial buffer will provide security and stability for your shared future. Number 7. Managing debts. Managing debts as a team is a proactive step towards securing your financial future. Start by listing all your debts, including outstanding balances, interest rates, and minimum monthly payments. Prioritize paying off high-interest debts, such as credit cards, as they can quickly accumulate and become a significant burden on your finances. Consider creating a debt repayment plan together, focusing on the debt with the highest interest rate first while making minimum payments on others. As you eliminate one debt, roll the money you were allocating to it into the next debt on your list, creating a snowball effect that accelerates your progress. Moreover, don't hesitate to seek professional financial advice if needed. A financial advisor can offer guidance and tailored strategies to manage debts effectively and efficiently. Remember, teamwork is essential in tackling debts, and by supporting each other through this process, you'll both feel a sense of accomplishment as you become debt-free. Number 8. Investing together. Investing as a couple can be a rewarding journey towards achieving your shared financial aspirations. Before diving into investments, take the time to assess your risk tolerance and investment goals together. A financial advisor can help you navigate the complexities of the investment world and tailor a portfolio that aligns with your joint vision. Remember that investing should be viewed as a long-term commitment. While markets may experience fluctuations in the short term, a well-diversified and well-managed portfolio can weather these ups and downs over time. Stay focused on your long-term objectives, whether it's saving for retirement, a dream home, or funding your children's education. Regularly review and rebalance your portfolio to ensure it remains in line with your evolving goals and risk tolerance. By investing together, you'll be laying the foundation for a financially secure future that you can both look forward to. Well, that wraps up today's video on financial planning for couples. Tips for managing money together. We hope you found these tips helpful in creating a solid financial foundation with your partner. Remember, communication, joint goals, and a clear plan are the keys to success. Thanks for watching. If you enjoyed this video, don't forget to hit the like button, subscribe to our channel, and share it with your friends. And as always, if you have any questions or suggestions for future videos, please leave them in the comments below. Until next time, take care and happy financial planning.